Hello, guys, and welcome back to Cryptic Humility. My name is Vanessa Hurley. I am your host and guide. This is episode 18, and today we are going to be talking about ETFs. Unfortunately, we are also going to be talking about a major crypto scam and scheme that just came out. You might have already heard about it. I don't want to spoil it, but obviously, if you are here just for the current news, feel free to fast forward as we talk about it. But for now, I'm not going to disclaim too much, but unfortunately, these people are keeping me in business and spreading the word about the mission of this podcast and the mission of Cryptic Humility, and that is that we are suffering at the hands of a lot of illegitimate people in the crypto market, in the FX market, for fintech, for non-traditional banks, if you will, banks that are moving more towards a crypto-centric world. We are experiencing so many issues with scams and frauds, and unfortunately, it's just every other week we're hearing about a new scam. Obviously, I want to put an end to this. The whole mission of Cryptic Humility is to put an end to all the scams and fraud schemes that are happening in the market and talk to credible people, which, as I mentioned to you guys, we have two guest speakers coming onto the show. I've actually met with a couple of them. We're just kind of like refining what it is we want to talk about on the show and the most important things. Very excited. I have some people that graduated from UPenn coming on, and someone that's in Washington, D.C. that does a lot of cool stuff in crypto and banking and policies and all that good stuff. So hang tight, because we're going to be hearing from a lot of credible people in regards to why we're still experiencing all these issues in the crypto market, especially not only just with the blockchain technology and hackers in that sense, but also illegitimate business owners. We're going to be hearing for that today with this whole scandal that unfortunately we're gonna cover. But anyways, every single podcast episode is a step in the right direction. And today we're going to be talking about ETFs. I know in the last podcast episode I had mentioned to you guys that we might be covering more than just the S&P 500, which is true. Today we're going to be covering a little bit of ETFs and mutual funds and shifting our gears after that into crypto, and then we will cover the scandal. So, without further ado, we have a lot to talk about, and I want to dive right in. And also, I'll be tagging some resources for you guys at the end of this podcast episode, details on Spotify and Apple, and also YouTube, that are really good to utilize if you want to read these facts for yourself. If you want to do your own research, do your own homework, which we always encourage on the podcast, I will definitely link some things that you guys can look into from here. Without further ado, let's touch briefly upon ETFs. So if you're new to the stock market, you have no concept, that's the whole point of this podcast. Let's get started. So an ETF stands for an exchange traded fund. And basically what this is it's a collection of securities that you can trade sort of in a bundle. So instead of trading one individual company or one individual commodity or one individual cryptocurrency, you now have an option to trade things in bundles. And I'm saying now in the sense of crypto because I know that ETFs have been around for a long time. They actually established in the United States in 1993. So I would say now they've been around for about 30 years. Still somewhat new, but obviously a lot older than the crypto market and crypto advancements. When we say that ETFs can be a collection of assets or securities, when people are in the stock market mentioning, oh, like securities, blah, blah, blah. For example, securities is a big umbrella of many different topics. This can be stocks, this can be bonds, this can be derivatives, this could be futures, mutual funds, as we said we're going to talk about today. It's more of a pooled investment. So they might tell you, don't put all your eggs in one basket. Don't put all your eggs in one basket. Especially with investing, you should always dabble here and there. Well, ETFs are a good option for people who want to put all their eggs in one basket, maybe all, the money that they could invest into one portfolio, if you will. And ETFs give you the option to do so because, as I said, if you invest in one ETF, that could have 100 different companies and their performance in it, or 100 different commodities and their performance in it, or, more specifically, it could just track, which I don't want to give it away yet because we're not talking about crypto yet until a little bit later in this episode, but they also offer a lot of benefits, especially if you don't necessarily want to jump into the crypto market head on, which we'll explain later. I don't want to give it away. So, in any case, this is the best case scenario to put all your eggs in one basket. Obviously, I still wouldn't encourage you. I'm not a financial advisor. I still wouldn't encourage you to dump all your money into one ETF, but obviously, like one or two ETFs, and you can have a broad range of multiple investments from multiple different companies or businesses if that's the direction that you choose to go in. Comparative to mutual funds, ETFs fluctuate throughout the day, so their price can fluctuate in real time. Mutual funds prices don't fluctuate. They usually only change once, and that's after the trading period or the trading times throughout the day has closed. This might be also a good benefit if you're looking into commodities, as we've been talking about, and you're interested in investing in gold, oil, gas, some of these like essential items that you typically never lose value or always are in demand. If you're looking to trade multiple or invest in multiple of these assets, you can do so. With ETFs, they can be a little bit lower maintenance in regards to fees, transactional costs, and stuff like that, because it depends which ETF you're trading in, but a lot of times people are not selling their shares often, and there's not a lot of market movement, I would say. A lot of people are holding for the long term. And so ETFs are a little more passive in that way. If we look into Vanguard's consumer staple ETF, we will find some of the major companies that you could potentially invest in, which could be like Walmart, Coca-Cola, Costco, Pepsi, all the big dogs in multiple different industries. And actually, sometimes with ETFs, what you can do is, for example, there are specific ETFs that we'll talk about that you can invest in a certain niche. So, prime example, if you're super interested in the fintech world, potentially there is an ETF out there where it's all fintech companies within that ETF. So if you're like, yes, I'm pro crypto or I'm pro fintech, and I absolutely know that this industry is going to boom, if it's not already booming at this point, then you can look into ETFs to invest in for fintech companies and get a wide range of all the fintech companies that are public that are traded, and then you can invest in that as well. So it's a good option if you don't want to necessarily spread yourself thin, but you want all the variety and all the benefits that an ETF can offer. Going back to Vanguard Consumer Staple ETF, they have 103 businesses in that collection, or 103 assets, if you will, in that collection. So there's a lot of businesses in that are like top companies that you should look into, that you could invest in. And it's just simple. It's one investment, and then therefore you don't necessarily have to put all your eggs in one basket. You could dabble your money into an ETF and have still money left over, but you've already invested technically into like 100 different companies and their market growth. Over the last 5 years, this Vanguard ETF's annual percentage raise, if you will, has been around almost 10%. So it's actually doing very well. If you sell ETFs for profit, you will have to pay capital gains tax. And in regards to taxes, I'm not going to dive too deep into that. But if you sell, obviously, just like with anything in the stock market, if you sell one of your assets, you could be liable to pay capital gains tax, depending. NASDAQ is an exchange located in New York City. The reason why we're talking about it is because Invesco QQQ also has a NASDAQ index, if you will, or ETF, if you will, that tracks all the 100 companies that are on the NASDAQ exchange, like some of the top companies. So that's also an ETF worth looking into, is the Invesco QQQ ETF that is tracking the NASDAQ 100. And usually this is dominated by technology companies. That could be Apple or Microsoft, for example. On the NASDAQ exchange, there's over 5,000 companies that get traded pretty much daily on that platform. So it is absolutely massive. It's one of the OGs of the stock market, if you will. And I know we don't talk too much about the stock market on this podcast, but it's good for you guys to know and just to cover generally as we dive into crypto ETFs and what those look like. Dollar Tree and Apple are some examples of what you could find on the NASDAQ 100 ETF, or commonly known Invesco QQQ. And I know we talk futuristics here, and actually, as I was doing some research, I realized that a lot of robo-advisors actually push ETFs as well. And actually, some companies, which I'll list in the video, but some companies specifically only advise, especially like these robo advisors, for ETFs. Like they push ETFs, especially for like robo advisors advising you. If that makes sense. Okay, so let's switch gears really quickly and let's talk about crypto ETFs. Obviously, this is our main focal point. That was just to kind of give you a gist of ETFs if you're new, exchange traded funds, kind of what they look like, why they could be beneficial to you. Of course, I would encourage you guys to get invested into some of them. You should always talk to a financial advisor. Again, I'm not a financial advisor, but you should talk to a financial advisor, potentially at Morgan Stanley or Fidelity or some of these well-trusted companies, about the best avenues that you could take, especially if you're looking to explore in ETFs. But I think that they are a very good idea, like I said, for variety with a low investment cost. And also, I totally forgot to mention that sometimes you don't even need a ton of money to enter into these ETF portfolios or funds, if you will. You only necessarily need about $1. Now, obviously, wouldn't encourage you to invest only $1, but the minimums to enter into these are extremely low. All right, let's talk officially about the crypto ETFs. So, one of the biggest benefits of investing in a crypto ETF is that technically you will not have ownership. Here we go again. And actually, my phone is dead, so I gotta figure out how to do this. Hang on, guys. We Gucci. Anyways, technically, when you invest into these ETFs, you don't have ownership of Bitcoin or Ethereum. Technically, which we will talk about, but for example, Fidelity would have that ownership of Bitcoin or Ethereum for you, but when you invest in the ETF, you basically get to invest in the tracking of that price. So the benefit of this is that you don't have to worry about the fraud that's going on, and you don't necessarily have to worry about the risk of actually owning crypto like Bitcoin or Ethereum, and because it's so volatile, you lose out on your investment. An ETF, a crypto ETF, is a little bit safer because you're allowing the whoever you're working with to manage that while you are investing in their management, pretty much, as they follow and monitor and kind of mimic the Ethereum price or Bitcoin price, for example. Why this is good is that you don't have to worry about any private keys. You don't have to worry about having a digital wallet. You don't have to worry about keeping your crypto on the exchange. It's just such a better chance at avoiding risk in regards to fraud and risk in regards to loss in your own investment. The ETF for crypto is just tracking and monitoring the price as it would if you owned Bitcoin or Ethereum yourself. And like I said, you're allowing Fidelity to have ownership of those shares, and you can actually invest in that as Fidelity tracks and monitors the ETF, whether it is Bitcoin or Ethereum. Why I'm saying Bitcoin and Ethereum specifically is because Fidelity has two different ETF funds, technically, or ETF investment options that you can get into that we're going to talk about in a brief minute. Let's go into really briefly some examples of crypto ETFs. So the first one is a spot ETF. So that means that you have the ability to buy a certain cryptocurrency, whether it's Bitcoin or Ethereum, for example, in the current time at the current price that Bitcoin or Ethereum Ether is at. How this works is the ETF owns Bitcoin, for example, and then it sells its shares to investors. So then those investors can buy those shares of Bitcoin, and the ETF will mimic or monitor Bitcoin's pricing as it fluctuates. Futures is basically like setting a contract for purchasing or selling an asset or a cryptocurrency in a future date and time. And in that, you're probably hoping that the price will be at a certain point in that future time that the set contract is to buy or sell that cryptocurrency, for example. So this gives you the option to buy crypto at a future time, with speculation. This is all derivative based, but it's speculation potentially with where you think the cryptocurrency is going to be. Could be in a day's time, could be in a week's time, could be in a month's time, but those are future ETFs. Crypto ETFs are a way to attract indirect exposure to the crypto market, lowering your risk, but still meeting at that level of being able to engage in crypto. So not having ownership, which lowers your risk, but being able to invest in an ETF's ownership or Fidelity's ownership, for example, for you to still have some involvement in crypto. This is basically what I'm trying to get out to you guys about crypto ETFs. Fidelity offers two different crypto funds. One of them is the Bitcoin Wise crypto fund, and the second one is the Ethereum fund. As it's obvious, one invests in Bitcoin and one invests in Ethereum. Totally depends on what you're interested in. You can get involved in both. And actually, last episode, we were talking about crypto IRAs, and I had mentioned Fidelity. Of course, there are so many other companies that potentially could do this too. Since we talk about investing, and sometimes I mention my opinion here, if you most of the time, if you are gonna go in a direction of investing and you end up talking to a financial advisor, I always recommend Fidelity, just because obviously they have a tradition of excellence. They've been around the longest, and if you're gonna put your fate into anybody's hands, I would hope it would be a company like Fidelity. But anyways, back to my point is that when we were covering the crypto IRAs and we were saying that, after you max out your IRA every single year, you now have the opportunity to add a little bit of crypto into it. This Ethereum fund in this Bitcoin Wise fund with Fidelity, you can actually enter your crypto IRA into this mix. My overall stance on this before we go to the current news is that I think that crypto ETFs and general ETFs, whether it be in the stock market with different companies, different industries, commodities, stuff like that, mutual funds, I do think it's worth the investment. I think crypto ETFs are genius. If you don't want to deal with the hassle of the technology and figuring out your private key and then, figuring out your digital wallet and making sure that your funds aren't still out there on the exchange and, your crypto wallet got hacked and now you lost all your money or whatever it is, this is a great option to talk to your advisor and let your advisor do this for you. Allow them to help you invest in the crypto ETFs. And you might, in time, as crypto evolves and the market evolves, I'm sure it's already out there too. I will, we cover so much in the episode, but there's always so much more to cover. I will list some other crypto ETFs that might have more of a bundle, if you will, maybe more cryptocurrencies to invest in. But as I said, eventually in time, there will be tons of ETFs, I'm sure, with multiple different cryptocurrencies that you can invest in. But crypto is very volatile. So I would not recommend that you dump all your money just into one crypto ETF. Of course, I think ETFs are great. I think you should invest a little more conservatively, if you will, and then invest if you are maxing out your IRA looks good, you got enough saved, you and your financial advisor at a good point, you got a little money to risk, then I would say get into crypto ETFs. But if you're in a position where you're not a high risk investor yet, and meaning that, you are not established enough yet to take higher risks and not absolutely crash out if that doesn't go in your favor, then I would say stick to a more conservative ETF or more traditional ETF with companies that have been around for a long time that hold long-lasting value, because there's no guarantee that the crypto market will stay liquid. There is a huge chance that crypto can become illiquid and that we don't end up seeing any more value into it. Obviously, I hope that's not the case because this is my career, but not to get all deep with you guys, but I think that make a wise investment choice and talk to your financial advisor. I truly think that ETFs for crypto are kind of genius if you don't want to deal with the hassle and also all the high fees and the costs. This is a little bit a more passive, long-term way to manage Bitcoin or crypto, dabble a little bit into it without going too deep in that you can't get out. Drum roll, please! We have to talk about this week's crypto scam, even though I don't want to. I'm sure you guys have heard the news. This came out literally like a day ago, but Celsius, the company Celsius out of New Jersey that started in 2017, is under fire for a lot of fraud that has been happening at the company. What it was a decentralized platform, so a DeFi platform that allowed people to invest in crypto loans, to invest in crypto and receive incentives and rewards back, such as earning rewards on crypto deposits, if you will. Their whole slogan was to try to encourage society to unbank themselves. So they were trying to push people away from regulatory banks, traditional banks, which unfortunately for why this ended south, it sucks because I actually agree with that. I like the concept of moving away from banks and becoming your own bank, you know, and trusting in yourself to do person-to-person transfers and all these things that we talk about on the show. It sucks that this company ended up being fraudulent. And the question is why do we keep allowing these things to happen? What are the main issues? Is it regulation? Potentially, a lot of these, to slow us down, to regroup here, because I'm going to go on a tangent and I'm going to breathe through this because it's frustrating because it's the same thing over and over and over and over again from these companies. Basically, let me give you guys the tea. What was happening was that this company, Celsius, the CEO, which I'll list on the screen because we all know that I butcher names, the CEO was taking customer funds and essentially investing it into its native token, which I believe is CEL. For a moment, I'm going to read this to you guys because I copied it for a specific reason. This is on justice.gov. I'm going to link this below if you guys are interested. It's from the United States Attorney's Office from New York City, so the Southern District of New York. And this is what it says. The founder and former chief executive officer of Celsius Network LLC and their affiliated entities pled guilty to 1 count of committing commodities fraud and 1 count of committing securities fraud in connection with 2 fraudulent schemes at Celsius, the perpetrated bank of the crypto industry. They manipulated CEL's price, the native token, by spending hundreds of millions purchasing it on the open market to artificially inflate its value. So using customers' funds to inflate and purchase the token's value, increasing its value. At times, they use customer deposits, as I just said, to fund these market purchases without disclosing that to customers. In the first scheme, the CEO misled Celsius's customers about core aspects of the company he founded, including Celsius' success and profitability and the nature of investments Celsius made using customer funds. I'm almost done, but just to keep reading because it's good for you guys to know. He put investors' money into riskier and riskier bets and secretly used customer money to prop up the price of CEL token. The CEO made tens of millions of dollars selling his own CEL at artificially high prices. So, taking customers' funds, investing it into CEL token, him selling out his shares for that token and his ownership for that token, giving him a ton of money. So when the company went bankrupt, of course, all of the customers did too, because their investments weren't traditionally going towards making them wealthier. It was to inflate the coin. It's so, in a way, I think this is so similar to meme coins, this strategy with crypto business startups. What they do is they create all this hype around their token and they're like, yeah, invest in our token, like, you know, or you know, invest in our company. They take that investment, they put it into their native token, or in other ways, a meme coin, if you will, to jack up its price. But then when the business model itself is not profitable and there's not a demand necessarily anymore and customers aren't benefiting, we're going to see that token skyrocket down. The CEO is going to cap out on the money that he has earned from all that money, customer funds that he put into the token, leaving the customers high and dry as the company falls to bankruptcy. That was me recapping everything that basically this article is saying. And you guessed it, he made tens of millions of dollars, but now he's facing jail time. I think he's going to be in jail for about 12 years, potentially. Obviously, this is breaking news, so I will keep you guys updated on this story probably in the next episode. Or if you follow me on social media for Cryptic Humility on LinkedIn or X, definitely check out, I'll be making posts about this to keep you guys in the loop. The one good thing is that justice is being served, but at what cost? Every single year, and we talked about this with Christian, our first guest speaker on the show, but every single year there's a fraud scheme. Every single year, billions of dollars are being lost. Every single year, we're seeing more innocent people invest in these crypto schemes. And you gotta watch out for crypto startups in the sense of like exchanges and lending and stuff, because this is exactly how they can get you, and they can be malicious in regards to how they build wealth and then stick you out for it. But obviously, they're even risking their own life, because if they go with this tactic, eventually the justice system is going to catch up with them. Their business model is not going to be sustainable. It's absolutely crazy that there's no rules or regulations yet that enforce these kind of things to not happen. Hey, if you want a crypto business startup, we support you, but by no means can your customer funds be going towards your native token. At least for like the first 5 years or the first 10 years, or so, there's got to be like some regulation that prevents people from investing in just a more fancy meme coin of a company. All the time on this show, we cover scam, we cover fraud schemes. We just covered Bitcoin ATMs last episode. And actually, I did a poll on LinkedIn, and you guys should definitely follow along the polls that I do, because it's great to start conversations around these things off the podcast, which is truly what I'm trying to do. As great as it is to listen to me every single week, I would love to talk to you guys, and this is why I do what I do. But we saw that there's so many Bitcoin ATM scams, and then it's like every year there's another huge scam that's happening in the crypto market. Why is that? Why is that? Billions of dollars are just go over our head, and I like try to wake people up, and I'm only one person, and obviously guys, I'm not a professional, I'm not a pro. I've been studying the crypto market for 6 years, did a directed study, have been reading books, I do research every week for us, but truly it's like we need to all come together to say, these are the rules and regulations that need to be in place for crypto to thrive. These are the things in the crypto industry that truly are not going to thrive or survive. These are the things like fintech that we should be putting more emphasis and focus on. And also, hey, if we're not sure about crypto yet, then maybe we should create ETFs where we could start dabbling into crypto without the risk of losing everything entirely. Definitely, we need to be having more conversations about this. We need to be taking this more seriously as a society. I know that, like, not to get all like political with you guys, but I know that there's so much happening in our political world right now. I know that there are so many other huge issues hitting us, but the crypto industry has so much potential. We are leading against some of our top competitors. Like, there's some countries in the world that aren't even like investing in this stuff yet, which I see as an advantage. If we can get out the kinks of the crypto market, because Bitcoin does have potential. Ethereum does have potential. We've covered these things on the previous episodes, and they do have value. They do offer long-lasting value from a business perspective, from maybe even a potentially a digital cash perspective, also digital gold as we see Bitcoin. And that's why Fidelity is only investing in Bitcoin and Ethereum so far, because Fidelity knows that Bitcoin and Ethereum have the furthest chance of being long lasting in our society. Again, we need to hear from you guys. Please let me know what you think on LinkedIn or X. Let's start a conversation about these issues and get them addressed. As I've been telling you guys, guest speakers are coming soon. We're working out the kinks with them. It could take some time. And also, we are going to be going live on the street. It's been raining every single day in Massachusetts, so I'm honestly just waiting for a clear week to get out there. But hopefully, with starting conversations here and also on LinkedIn and then also in public, we can create somewhat of a frenzy and try to figure out how can we bring justice to this market. Thank you guys so much for watching. If you have any questions, please let me know. And as I always say, if any information was missed or we needed to fact check something, it's always in the video. So if you're listening on Apple Podcasts, I highly encourage you to watch on YouTube or Spotify so you guys can check that out and make sure that you don't miss any crucial information. Any links that need to be attached will be attached, and I hope you guys have a fabulous week. If there's anything I could do, definitely let me know. Again, this is Cryptic Humility. I will see you guys next week, and that's it. Thank you.